I know folks are going to keep coming in after lunch, but welcome everybody to this panel discussion on using innovative finance to help sustain the world's fisheries. For those of you I haven't met, I'm John Verdon. I'm the director of the Ocean and Coastal Policy Program at the Nicholas Institute, and I'm very excited to have the panelists that we have today with incredible experience on the topic, and I'll introduce them in a moment. But I just wanted, at the outset, just to give a quick introduction about what we're really hoping to get into a discussion on today. And particularly since we are post-lunch and the time when everybody's just going, I'm hoping that we can just have a real informal discussion here. And of course would welcome anyone who wants to come down to the front rows and join us. Please do. But what we really would like to talk about here is the potential and the experience to date of using finance to help drive reforms in and help end the overfishing problem that the world has identified for so long. And just to sort of set the stage a little bit before I introduce the panelists, taking stock of where we are now, the latest assessments that we all have from the Food and Agriculture Organization suggest that for the fish stocks in the ocean that we've assessed, 29% are biologically overfished. Another 61% are considered fully fished, which is not necessarily a bad thing, but certainly means that any increases in fishing pressure are likely to drive those stocks to levels considered overfished. And particularly in places like South Asia, Southeast Asia, and throughout the tropics, the problem is most acute. And this is where we have some of the biggest buildups of fishing fleets that are driving overfishing throughout this region. So that's where we are today. But at the same time, I think you all probably heard talk of the Sustainable Development Goals in the earlier sessions. A few weeks back in New York at the UN General Assembly, the world agreed on a new set of Sustainable Development Goals, one of which is to conserve and protect the oceans with an explicit target to end overfishing by 2020, which is frankly not that far off for such an ambitious target when 29% of the fish stocks we know of are overfished right now. And experts suggest that to get there, to get to that target, we'll have to reduce fishing effort or fishing pressure on these stocks by somewhere on the order of 36 to 43% globally, which is a pretty significant reduction to rebuild the ocean's fish stocks. And at the same time, the very back of the envelope estimates suggest that this is going to have a price tag on the order of present value of about $200 billion. So this is one of the questions that we really want to explore this morning is, if this is at least the order of magnitude of the cost it's going to take to solve the overfishing problem and meet the world's target that it's set for ending overfishing, how are we going to pay for that? How can we get the finance to pay for that? And at the same time, a follow-up to that, is it possible that smart capital and availability of finance from a range, from public sector to private sector, can actually help drive some of the reforms in governance and the tough decisions that need to be taken in order to get these kinds of reductions and allow these stocks to rebuild? So I'm fortunate that we have a panel here of folks that have been working on these topics for the last couple years and even beyond, in trying to use finance and capital as a tool to drive fisheries governance reform and end overfishing. So just introduce them quickly starting with Pawan Patil, who's a senior economist at the World Bank, and Pawan's leading a lot of the bank's investments in fisheries governance reform right now, particularly in the Caribbean and in South Asia. And then next to him we have Alex Markham, who's an associate with Encourage Capital, which is an investment management and advisory firm that's working on a number of different approaches to finance conservation, and has been looking at this issue for the last few years of how to draw more finance in support of fisheries reform and ending overfishing. And then lastly, Larry Ban, who's been an advisor to a number of agencies and investors in leveraging finance and capital to support fisheries governance reform, and particularly at the moment with the Prince of Wales International Sustainability Unit, and looking to try to, in a number of experiences. So to start us off here, I just, again, in the spirit of a very informal conversation that I'd like us all to have, I'd like to just ask each person to give us a few minutes, just share with the experiences that they've had in their different roles in trying to basically deploy capital in different forms to help end overfishing in different places. So I'll start with Palin and move over to Alex and then Larry. If you could just give us a few minutes of what you've been up to recently on the topic.
Great. Well, thanks, John. And first of all, congratulations to Tim and to the Nicholas Institute for celebrating their 10th anniversary, and of course to Duke University. And thanks very much for the kind invitation here today. So first of all, how many of you know the World Bank or have heard of the World Bank or have an idea of what the World Bank actually does? All right, so those of you who had your hands up, how many of you actually have a favorable opinion about the World Bank? Okay, some of you have an opinion about the World Bank. All right. Interestingly, what we discovered when John was with us for about 10 years and a little bit longer was that the World Bank is one of the largest financiers, public financiers of sustainable fisheries. Can anyone guess approximately how much that is? Any guess, just random guesses. There's no right or wrong answer, actually, here. Back of the envelope calculation, John put it together during his time at the World Bank. It's actually just under $1.5 billion. $1.5 billion of public financing in an active portfolio of $6 billion for ocean financing that's gone to sustainable fisheries. That's an active portfolio. We have another $1.5 billion in our pipeline over the next 3 years. But when you think about it, with the deficit, which some economists are arguing is about $200 billion in order to actually get to the reduction of fisheries pressures that John was talking about, that's just a drop in the bucket. The reason I mentioned that is because in order to actually create an enabling environment, to have the right policy prescriptions that we'd like to see in terms of better fisheries governance and governance reform, we're going to need to basically mobilize not only the public sector, but also the private sector to actually generate the types of resources that are actually required to push those public sector reforms forward, which then create the enabling environment that actually will have private actors, who are the fishers themselves, to actually do their job in a much more sustainable and efficient way. So in terms of my experience, I've been managing World Bank projects over the last 18 years. I've been on the investment side of the World Bank. And one of the things that we've done over the last 18 years is gotten back into sustainable fisheries and fisheries investment. Why do I say get back into it? Is because in the 1960s and 1970s, like many others, including private capital, we were actually investing in bigger nets and bigger boats. Why? For the sake of better economic development, shared prosperity, and growth. But over that period of time, for those of you who know, the fisheries essentially started collapsing, precisely because of those bigger nets, because of those bigger boats. And because of the fact that this consciousness of sustainability wasn't actually in the mindsets of policymakers, yet alone the fishers themselves. And why would they be? We're actually after economic rents. That's the incentive structure. So we have a huge paradigm shift that's actually happened, including within the World Bank, and we actually started from the bottom up. So what do I mean by that, and why is that actually important? It means that we actually started with the artisanal fishers, because at the World Bank, for those of you who do know what we do, and for those of you who don't, we're really about poverty reduction. We're about poverty reduction. And the reason that fish actually matter is because when we think about it, fish means food. Without fish, we're not going to have the kind of food resources that were required to actually meet the needs, the protein needs of a growing population of about $9 billion. And so all the work that the World Bank is doing in the fisheries sector right now is basically to try to address that crossroads between trying to ensure food security in the context of sustainable management of fisheries, and not only the nearshore fisheries, which we'll talk about as well, but also the offshore fisheries, a new area of investment for the World Bank, given the history that we had in the past. And what I'd like to say is that I think we're having a little bit of traction. The $1.5 billion is certainly a beginning, and certainly not necessarily the amount of resources that's actually going to be required to turn the tide and ensure this reduction in fisheries effort and fishing effort, but it's certainly a good step. In terms of my own personal experience, I've worked in China, the Philippines, Indonesia, across different countries in Africa, mostly Southwest Indian Ocean, in the Caribbean, and so on and so forth. And what I can tell you, there's no magic bullet or silver bullet in actually to address this particular issue. And so what it requires, in my view, and I'd like to encourage everyone to think about that as we go through this hour-long together, is how you, in your individual capacity, as well as you in your institutional capacity, can actually help to ensure that we can actually move towards an era of sustainable fishing and sustainable consumption when it comes down to seafood products, because at the end of the day, it's the value chain that ultimately derives what happens with that individual fisher trying to catch a fish. So with that, I'll turn it back to you, John.
Well, thanks, Alex. Alex, good
Tough act to follow. I'm Alex Markham, and as John said, I work at a firm called Untitled Chapter, which is a private equity firm. I don't know how many people know what private equity is. Okay, a few. So we sort of represent the bucket of capital that is return seeking, usually in our case from high net worth individuals. I think we're a little bit unique in that our firm really tries to take a solutions-based approach. So we start with the problem, and then we work with family offices, nonprofits, foundations, and for-profit enterprises to try and craft solutions to those particular problems in a way that can still return capital to investors. And so the firm was actually was formed in January of this year through a merger of two existing firms, Echo Asset Management, which was really an environmental consulting firm for the most part. We had a small carbon fund, but we really worked with family offices and nonprofits to try and consult them on how they could apply private capital to solve environmental problems. And then we joined with Wolfenson Fund Management, which was the family office of Jim Wolfenson, who was the head of the World Bank for 10 years and was a much more commercial private equity firm. And so now this new entity, Encourage Capital, focuses across the environmental and social space. We have verticals in sustainable fisheries, financial inclusion, green infrastructure, ag, water, and we're considering some other verticals potentially in ocean plastics and other pressing environmental and social issues. And the work in fisheries only started 2 years ago. We didn't previously have a focus area in fisheries, but we were asked by the Rockefeller Foundation and Bloomberg Philanthropies to partner with two nonprofit organizations, Oceana and Rare Conservation. And Oceana, probably all know, is one of the largest policy advocacy nonprofits in the world, especially for oceans-related work. And so they were focused in a number of countries of interest to the two foundations, working on sort of top-down policy change to improve this overfishing issue that we talked about earlier. And then we had Rare Conservation, which is really a community organizing, bottoms-up type of group that focused on rights-based management systems. And we were brought in as a private capital provider to try and come up with different investment mechanisms to stitch those efforts together and really incentivize fishers at the industrial scale and also at the artisanal scale to participate in the strategies and policies of Oceana and Rare. And so for the last 2 years, we've been scouring the world looking for investable opportunities, because the end goal for us, given that this was publicly funded work by two foundations, was to really try and lay out a roadmap for how other for-profit private equity firms might invest into this space, because there isn't a lot of track record, there aren't many sort of accomplishments to point to of investing private capital to try and reform fisheries. And so we focused primarily, after sort of an exhaustive country search, we decided on the Philippines, Brazil, and Chile as our three target countries, and tried to really structure the investment strategies from the bottom up, so working with entrepreneurs, fishing villages, industrial fishing companies, government regulators, to try and come up with a suite of solutions into which, again, you could apply return-seeking capital to try and move the needle on stock recovery, livelihood improvements for fishers, and habitat conservation. And we just released the first set of investment blueprints focused on Chile specifically, so small-scale fisheries in Chile and also industrial-scale fisheries in Chile. And then over the course of the next 2 weeks, we'll also release blueprints on Brazil and the Philippines, and all of those can be found at the website investinvibrantoceans.org or on the Encourage Capital website.
Thanks, Alex. Larry?
Thanks. Well, it's terrific to be here. I'm really privileged to be on a panel with people with such interesting backgrounds and great organizations behind them. I effectively function as an independent consultant. I spent the majority of my professional career as an investment banker working with companies and very much in the private sector. And for the last 6 years have moved to a practice where I spend most of my time working on environmental investment opportunities, and a lot of that has been with fisheries. I've spent the last 6 years or so working with a variety of different organizations and figuring out how we can best deploy different types of capital to fishery reform. I work both with people who are developing projects and therefore projects that are looking to raise money to implement more sustainable fishing practices. And I also spend part of my time with investors evaluating and looking at these types of investments. So I've had the opportunity to sit on both sides of the table and think about this issue from a bunch of different perspectives. Some of the projects that I'm working on currently or have worked on recently that I think would be interesting to you all are work that I've done with the large environmental NGOs. So I've had the privilege to work a lot with the Environmental Defense Fund, with the Nature Conservancy, and as John said, with the Prince of Wales International Sustainability Unit. To give you a little flavor of the kinds of projects I've been working on, probably the biggest part of my effort right now is working on a blue bond initiative, which is helping small island developing states structure and issue basically sovereign bonds, with the proceeds going to funding the hard upfront governance costs of implementing more sustainable management practices. So that's one thing that I'm taking a lot of time to do now. It's an effort very much to follow on what's been done with green bonds, as I'm sure a number of you are familiar with. The green bond market has been a huge success. There's somewhere between $75 and $100 billion that have been raised through that vehicle, and the hope is that we can take lessons from the green bond market and apply them to sustainable fishery management. I've also spent quite a bit of time working with island countries in the Pacific on different mechanisms to finance more sustainable tuna fisheries. And these are, unlike the work I've been doing with blue bonds, which have been more targeted towards small artisanal fisheries, these have been projects that have been raising capital to try and address industrial tuna fisheries in the Pacific. I've had the opportunity to work in a number of fisheries in the U.S. One thing I've done is I spent a couple of years running a fund called the California Fisheries Fund. It's a $5 million revolving loan fund in the U.S., so very small dollars, but we've successfully put that money to work supporting fishery reform in the U.S. And I've also spent time working with a number of entities in the U.S. called permit banks that are ways to both promote sustainability in fishing, but also address some of the hard social issues associated with fishery reform, and had some interesting experiences doing that. So I'll stop there, but that's a little flavor of what I've been working on, and now feel like I have a relatively long sweep on this dialogue.
Well, thanks, Larry. Thanks, everybody. I think you get a sense of very different approaches to deploying finance and capital to support solutions to overfishing, from the World Bank deploying concessionary loans and lending to governments, Alex working with private equity to support companies and communities, and then Larry working with putting together now bond instruments for governments in making reforms. And so, thinking about how you're looking at the lens that you're looking at in terms of when is capital available to finance fisheries governance reforms. Larry, maybe if I can start with you and just ask, what are the types of investments that you're seeing
Sure.
for fisheries governance reform that could contribute to ending the problem?
Sure. So I think, John, you may or may not have mentioned the numbers that get thrown around, but the amount of money that's required to reform fisheries and achieve the sustainable development goals is big numbers. The numbers that are thrown out are anywhere in the $100 to $300 billion amount. I think it's useful in this conversation to think about where that money is going, what the specific use of proceeds are. Probably the biggest single amount of that is money that needs to be spent on the upfront design and implementation of new governance practices. So the hard work of going into these countries that need to change policy and regulatory frameworks and doing what can be anywhere from a 2 to a 10-year process of actually getting the right rules in place. The second bucket, which is, and that first bucket is one that's big and is particularly problematic to fund. That's money that needs to be invested when risk is high, when there's a tremendous amount of uncertainty, a bunch of things which are hard for many different investor classes to get their hands around. The second bucket, which is big but ongoing and smaller numbers is the actual annual costs associated with paying for those new governance rules that you put in place. So money needs to be available in fisheries for the administration of new governance programs, more specifically for monitoring what's going on in fisheries, enforcing compliance with the rules, doing the science that's needed to make sure the governance is focused on the right things. So that's a second big bucket of money. Hard to fund because it's mostly a public service good that investors, some investors, particularly private investors, have a hard time getting their head around, but at least it's money that's spent post re-regulation or new governance, and so it's a little bit less risky. The third bucket is really what is traditional private sector investments. So if you get good governance in place, up and running and operating, there's a lot of opportunity to change configurations of fleets so they fish more efficiently, they fish better, they fish for higher value product. There's lots of investment opportunities in the supply chain that help take fish that's been harvested to market in the most valuable and most cost-effective way. So the third bucket, which is one that I think a lot of people talking about financing fishery reform focus on, which are these private sector type investments, are there, but they're actually a relatively small number in my mind compared to what needs to be put on the table for governance reform. The last bucket I'd leave you all with, which is maybe the most problematic, and there's lots of questions about whether it belongs in this general conversation or not, is, and I think John would say it does, is when you re-regulate fisheries, there's typically tremendous overcapacity in these fisheries. That overcapacity is both overcapacity of capital, so too many boats, sometimes too much processing capacity or the wrong kind of processing capacity, and there are often too many people fishing in these fisheries. And so another big bucket of costs is how much money needs to be allocated to things like alternative livelihoods. What do we do to give people who are displaced from a fishery that's being more sustainably managed new livelihoods? And what do we do to compensate investors who've invested a lot of money in what's now obsolete equipment? Do we give them a back door to get out and effectively make the process of reform easier? So I'll leave you with those four buckets.
Well, thanks, Eric. I think that's a really helpful way to think about it. And Alex, if we think of these four buckets, sort of the cost of upfront changes to the rules and governance reforms, then the cost of administering and monitoring those, then traditional private sector investments in a healthier supply chain, and then lastly, this fourth bucket that you mentioned, Larry, is if you're going to have some compensation for the loss of livelihoods and jobs in the transition. In your experience so far with Encourage and ECHO, have you seen examples or do you see potential for leveraging private investment and deals in some of these countries beyond just that third bucket in private sector investment? Or is it a non-starter until the upfront governance reforms are in place?
Yeah, so I guess I should qualify what I'm about to say. We've spent 2 years scoping projects now. We haven't actually deployed capital into the projects. It's been a pretty detailed diligence process, and we really tried to put together comprehensive business plans and actually build the full private equity financial models for these things, but you never quite know how it's actually going to play out. So with that being said, the business models that we've put together do have private capital going into at least these bottom three buckets. So when I look at the administration, sort of administration and implementation and policy, I think there are a lot of interesting technologies out there into which a group like ours could invest to help scale. So just to name two companies, Shellcatch and Pelagic Data Systems, they're both sort of Silicon Valley type startups that have passive data collection technologies that you can put on boats, and they show where the boats are going, gear that they're using, how much they're landing, and then all of that is sort of passively collected, being back to a central receiver. and that gives you a lot of information on how that fishery is actually operating. So that's something that maybe not a private equity firm could invest in, but certainly private equity or private capital could invest in those kinds of companies to help scale them. And I think if they did achieve scale, it'd be much easier to administer a lot of these policies that we're trying to enact on a national level in these countries. When I look at the commercial, so I'd say the majority of our investment has focused on that third bucket, the sort of supply chain improvements. Especially when you look at small-scale fisheries, the artisanal fisheries that we were talking about earlier, you see 50% of the seafood landed in the world, 90% of fishers coming from the small-scale sector, and these are guys usually in boats that are 12 to 18 meters, if that, often no motorization, but catching some of the highest value species in the world. But usually those products are either completely, they're spoiling on the dock or they're spoiling on the vessel. They're poorly handled. They usually change hands 3 to 5 times before they ever make it to their primary processing facility, and it's only a tiny fraction that ever make it to export markets, and that's a huge amount of value destroyed. And so we've worked with a number of companies in the yellowfin tuna in the Philippines, and then also with some high value species in Brazil and Chile as well, to try and improve that supply chain. And the way we think you can do that most easily is, rather than investing in an ice plant here and in a primary processing plant there, is to find companies that can basically disintermediate that entire supply chain, or reconfigure, for that term, the supply chain, and buy directly from artisanal fishers, and then really try to add value to that product, capture the margin that's normally associated or normally lost to middlemen or to spoilage, and then use some of that revenue to channel it back towards fishery and livelihood improvements. And so we think that's a really promising opportunity to apply private capital, and it's highly replicable. There are artisanal fishers all over the world catching really high value products that never end up in the appropriate markets for them. So that's the third bucket. And then I would say on the overcapacity alternative livelihoods side, when you add value to products, you create a huge number of jobs. So you may be cutting out transport intermediaries, which isn't something that's important. Looking at the unintended consequences of that is really important. But when you create processing facilities that add value with can the products, you do create a lot of jobs that way, often with better gender equity. And so I think that's an opportunity to really improve the livelihoods of entire communities, and not just the fishers who are collecting the products. And so I think, and if you get a chance to read the blueprints, you'll see we sort of call out the different buckets into which you could apply private capital, and which forms of private capital would be most appropriate for each bucket. But I think it goes beyond just that third one.
Yeah, sure. Okay, great. Well, Palin, I'm curious, in the countries that you've been working, and the bank's been providing public finance on particularly the first bucket, but also in some cases this fourth one on the transition costs and alternative livelihoods. What have been the experiences that you've seen, and have you seen any investments from the public sector to governance reforms that have led to investments from the private sector in that third bucket there?
Great. Well, thanks, John. So again, to understand how the bank is effective, or how it could become more effective, or how it's been ineffective in the past, and some of the constraints, is to really understand the business model of the bank. And in very simple terms, the business model of the World Bank, which is IBRD and IDA resources, are concessional financing and highly concessional financing instruments, is that we lend to governments. But we lend to governments in a way that actually they undertake essentially the use of those resources to essentially deploy resources down their chain, even into villages, to exact some kind of change. The reason that that becomes important is because when you have money in the hands of the government, it doesn't necessitate that actually the private sector will become closer to the development solution. So oftentimes what that means, to answer your third question first, is that we try to structure the way that we put our financing to actually incentivize the private sector to come in as cooperating, collaborative partners, whether through co-financing with us in some elements or financing in parallel activities on the ground. I want to give one example before I answer your other questions. For example, in Indonesia, some time ago, we put in the largest public financing for coral reef management and rehabilitation of coral reefs, which essentially was about trying to ensure food security for coastal populations in a country where there's 81,000 kilometers of coastline, over 36,000 villages that are dependent on marine resources, including fisheries, for their livelihoods, including for food security. And the key point here was that ultimately that just the public financing by itself was not actually solving the problem. What it did do, however, was to create a platform of comfort for big corporations like Mars to say, wow, if the World Bank is investing, let's say, $200 million, and that's crowding in another $2.5 per dollar borrowed from the World Bank in terms of grant financing, that gives us comfort to actually put in our own investments, let's say in terms of processing of marine resources, fisheries processing, or seaweed cultivation, to create some kind of supply chain mechanism. And that's indeed what actually happened. So what I'm trying to say here is that in the basis of things, what the World Bank can often do is create a solid framework or groundwork of enabling public sector capital to allow others to be crowded in to basically do more of the innovative financing that's required in order to kind of get to the systemic change that we'd all like to see. In terms of the governance in and of itself, I just wanted to point out that what is fisheries governance all about? It really ultimately means, at least I try to simplify it in my head, to better management of the natural resources, the natural asset. It's essentially better management. So what does that really mean in terms of what the World Bank can actually finance through public financing? It's really creating or helping to be more effective enabling legislation, essentially policy. And I want to give one illustration of a policy prescription in the governance sphere that actually has made a difference, not only in countries like Indonesia, but across many of the low-income countries that we work in. And that's around co-management. Collaborative management is essentially, for those of you who don't know, management of the natural asset, in this case fisheries resources and nearshore ocean and marine resources, between communities and local governments with national government overview and coordination and supervision. The reason that becomes important is because when we talk about reducing fishing effort, ultimately, and we talk about, that means people are likely to lose parts of their livelihood, and they're going to have to substitute that with other methods of alternative income generation. But what the amazing thing about co-management and the policies that have been put in place with financing from the bank to actually implement them, why that's been transformational is that it's empowered communities for the first time in many countries that traditionally didn't have rights to actually have ownership, and if not ownership, use rights and management rights and decision-making over those natural assets. And as we all know, when we're not told, but we actually have a say in what we do and how we use the resources that are available to us, it makes us even that much more capable of being better stewards of nearshore fisheries, but also able to tighten our belt and try to find alternative ways to manage challenges so that they become more beneficial overall, even though you might be losing out in terms of income potential in the near term. So I just wanted to mention that because I know over the course of the remaining period of time we're going to get into some of the nitty-gritties about what these governance mechanisms mean and why does that matter in terms of private capital as well.
Well, that's what I was going to follow up with you, Larry. In looking and putting together some of the financing packages that you've been talking about for sustainable fisheries, have you come across certain regulatory barriers that said it's not an investable proposition to invest in this fishery at all? Finance can't be helpful here. Or are you seeing certain conditions, as Palin mentioned? Well, if you have some sort of community tenure in the fisheries, then it becomes an investable proposition. Are you seeing certain governance barriers in place for that?
Yeah, and I think one thing to be clear on is when we talk about governance helping fuel finance, what kind of money are we talking about moving? I think the real win with fishery reform is figuring out how to bring not just public and philanthropic capital, but the deeper pools of private capital to this $200-300 billion need. Without good governance in place, it is very hard to get constructive conversations with private capital. And let's talk for a second about what good governance looks like, I think, through the eyes of at least some of the private capital people that I've talked to. So good governance is brings with it some real key sustainability criteria. So having a catch limit on the fishery, having limited access with a catch limit on the fishery, having that catch limit be grounded in strong science that investors can get their head around and digest, that the fishery will be managed with catch levels that will promote a rebound in the general health of the asset. Investors generally want to see strong monitoring and enforcement in place. So not just understanding that the rules are set in a way that the stocks are going to recover and be able to be managed with low volatility and high predictability, but also that there's real teeth behind those rules and that somebody's going to be there to make sure there's compliance. I think the interesting place where the governance conversations get to is something that Alan talked on, and it's this issue of rights. So you can have strong catch limits, scientifically based, well monitored and enforced, but without rights associated with them. So you can have a set catch limit, but if the rules say anybody who wants to come into the fishery until that amount of fish is caught creates a free-for-all, which, while it may be environmentally sustainable if it can be managed and monitored, doesn't create a very attractive economic proposition. Where good environmental management comes together with good economic upside for private investors is when there's rights associated with the strong scientifically based catch limits. And rights basically become a mechanism to use a potentially bad word in this discussion, allows for financial returns to accrue to people who invest capital, for better efficiencies to be achieved in the fishery, and things that generally create the more interesting financial proposition. So that may be something we want to come back to and talk more about. But
well, just quickly, Larry, while we're on, can you give some concrete examples of what rights look like in different contexts when we say fishing rights or access rights? Exactly.
Sure. So when I talk about rights loosely, what I mean is that the right to harvest fish is created in some cases as a property right or something a little more loose than a property right, and that right is actually allocated to participants in the fishery, giving them the ability to harvest that fishery. And with rights generally comes an ability to fish more rationally, to have a longer-term view of what the economic opportunity is for those who own rights. That longer-term view tends to create investment horizons that private investors are comfortable with. So these rights can be in a number of forms, John, as I think you're getting at. They can be rights that are allocated to individuals. They can be rights that are allocated to corporations, rights that are allocated to communities or other social organizations and social bodies. So there are many, many different variations in how these rights can be established and who actually gets them. And it creates different investment propositions, but I think the pairing of rights with strong catch limits and strong monitoring and enforcement tends to be a pairing that is what gets private investors interested.
Well, thanks, Larry. Alex, I want to just ask you a quick... Yeah, so I just want to ask you, and particularly in the 2 years that Encourage has been looking at this, have you seen a lot of fisheries that sort of meet some of these criteria and start to become a pipeline of investable deals that you see or not? And then after that, I want to open it up to questions in the time that we have.
So I'd say sadly not. There aren't a lot of fisheries that meet those criteria outside of North America, the EU, Chile, New Zealand, Australia, and that's I can't state enough how stark the difference is from an investment standpoint between countries that do have rights-based management systems and ones that are backed by actual independent scientific committees setting limits on those rights. When I look at the three countries that we were working in, Brazil, the Philippines, and Chile, I mean, almost from the outset, we said, okay, Brazil, we're going to give it our best shot, but there's almost no framework in place for granting exclusive access. And so we managed after looking across, maybe 20, 30 species, we found that there was something like a sort of property right in these RESEX, these natural extractive reserves that they've set up in Brazil for certain species. And so we were able to structure an investment around the mangrove crab fishery harvested out of these extractive reserves. So that's one form of sort of de facto property right. And then in the Philippines, again, there aren't sort of national scale quotas or tradable quotas, which is kind of the ideal world scenario from an investment standpoint, but they do have territorial user right fisheries. And our partner, Rare, is a strong advocate for these turf reserves, and that creates sort of an area that's set aside for a community to manage its own nearshore resources. And usually they're nearshore resources that don't move around a lot, so you wouldn't have a turf reserve for tuna, for example, but they work really well for things that pretty much stay in place. And so, again, we were able to structure another investment around territorial user right fisheries. And then in Chile is kind of the holy grail, because it has a mix of the two. They have a tradable quota system for the industrial fishery, and then on the artisanal side, they do actually have quota. It's not as easily traded, and then they have turf reserve systems for the nearshore community resources. And so, for us, we can pretty much invest in any of those fisheries. So we were able to take some of the most intractable fisheries in Chile, and because they have just passed this law in the last year and a half that has an independent scientific committee setting these quotas by species with sound data backing them up, we can take a lot of confidence in making investments into those fisheries. And if we then invest in the sort of other three buckets that Larry mentioned around the supply chain in trying to improve fishery management activities, we can take some confidence that we own a piece of that resource. So the common hake is one example where we've talked to 2 industrial fishing companies that are willing to set our quota, so we could potentially acquire up to 60% of what was a very large fishery. It's in tremendous distress now. The biomass is at maybe 5 to 10% of what it was 10 years ago. But if we buy that quota and we implement, and we actually pay with private capital to implement a whole bunch of reforms in the fishery, and the quota recovers, as fish stocks tend to do when they're left intact, it could be an incredibly valuable fishery, and that's something that's really exciting to private investors. And so, again, I think it just underscores your point with some case studies of just how important it is to be able to actually own an asset, and particularly an asset that's backed by sound governance and science as well.
Well, thanks, Alex. I think we've gotten a pretty good tour of sort of the investment perspective on fisheries, and I'd like to open it up now and see if there are any questions that folks have. I'd like to ask the panelists and just ask people to state your name and then particular panelists that you want to ask questions to, or to all. Anybody out there? Yes.
Okay, I have a couple of questions that I could kind of open up to the whole group. But the first one, I think the rights is as obviously a super important aspect of getting these fisheries to an investable space, but it doesn't lead necessarily directly to having X vessel prices that are returning higher profits to fishermen, right? I forgot to say my name, sorry. I'm Roxanne Aniga. I work at EDF. So I'm the new seafood specialist there. And I've heard of you, actually. So a lot of the work I've been doing there is trying to figure out how I can get, for example, the groundfish fishery in the U.S., which is managed sustainably. It's got a catch share program in place. It's, organized, and all the things are in place so that the fishermen should be getting higher returns on their fish, and yet they're not. And so I guess my question is sort of whose responsibility is it to find better ways of getting rewards to these fishermen, to maintain incentives for sustainable fishing? Who sets those goals, and kind of who's in charge of, are we setting priorities for the fishermen, for the resource, or for kind of overall livelihoods in the space? Yeah.
Larry, do you want to take that?
Sure. So I think your question's a great one, and I'd like to pause on a point that I know Encourage has spent a lot of time articulating in their report. I think it's important to understand where value comes from in a reformed fishery. I think there are 3 or 4 sources of value creation One is higher prices. So we're running a more sustainable fishery. We either are going to bring better product to market, meaning it's fresher, we solve the supply chain challenges, we get a better price, or we get a premium because it's certified sustainable. I'll just lay these out and then we can talk about the relative magnitude of these. The second source of value is the one that I think people maybe talk about most or most intuitively comes is we run a fishery sustainably, we're going to catch more fish. We're basically going to have more pounds to sell. That's the second value driver. So we have more pounds, we get a higher price per pound. The third value driver is operational efficiency. So by that I mean for the pound of fish you catch, you can catch that pound at half the cost of what it costs you to catch that fish in a fishery not sustainably managed. Then there's a fourth value driver in my mind that's a little more esoteric, at least from an investment standpoint, is when you put a good management system in place, the risk and volatility of your investment gets greatly reduced. And for people who are investors, you get to apply a much lower discount rate to the cash flows that the fishery is generating, and that creates value as well. And maybe I'll just close on the point that I think what you were getting at is there hasn't been a huge price bump in the Pacific groundfish fishery. Pricing is a really interesting topic and one we can spend a lot of time on. I think there's been some price benefit in the Pacific, but not a ton. And I think it's not the primary driver of value creation in most reformed fisheries. I think in the Pacific, though, the cost structure of fishermen has improved significantly. And at least for the fishing businesses I've looked at, they're making a lot more money being able to fish differently. So without a price premium, there's still a lot of value created. And I think that's an important thing to understand, that there are a number of different value drivers, and they're not always the most obvious ones, meaning more fish or somebody's paying a sustainability price premium.
Thanks.
Isn't your next question then, though, is who's getting that money?
Right.
You just said they're getting a lot more money. The fishery is getting a lot more money, but who's getting it?
I would say, I think the principal value is accruing to the fishermen, the people on the water.
That's not really been the story I've seen so far. I mean, there's a lot of people have left the fishery, and then a lot of the ones that remain seem to feel, and that's always a questionable issue with fishermen, but that there's still a lot of room for improvement, that they have a lot of fish they could pull out of the water, don't have markets for them, etc.
So this is a really long conversation without good data involved. So it is sort of speculative. I would say what's happened in U.S. fisheries, I don't mean to monopolize this, but what's happened in U.S. fisheries is I think there are a fewer number of, what's happened is the fleets have rationalized. There are people who were typically very small fishermen or ones who couldn't operate as efficiently who've fallen out. And they obviously don't have a great economic story associated with the reformed fishery. There are other fishermen who have adapted more quickly, have been more open to doing things differently, and for a number of them, I think there have been economic benefits. But it's hard, that macro data doesn't exist. It's hard to get everybody's profit and loss statement and add it all up and really see what's happened in aggregate. So,
And then there's still the question of winners and losers, and that's a lot of, what I'm asking there too, is who's in charge of sort of deciding what priorities we set there about, or do we just let it fall out as it does, and winners and losers kind of go the way of capitalism? And
I think a lot of it. I think there's a lot of different, and EDF has been really at the forefront of this. There are many bells and whistles or different ways you can put in place rights and certain things like owner-operator restrictions or owner or quota concentration limits. There's lots of ways you can tweak what I would call the plain rights tool to deal with some of these social issues and distributional consequences that I think there's actually decent practices, but you are putting your finger on I think a really big issue and something that gets tons of attention in any fishery that goes through a reform process.
Let's see. I'd love to keep talking about this one. Let's go on the next.
Thinking about efficiency in the economic sense and the gravity of the problem that faces us, as well as the best way to deploy capital. Aquaculture, farming, fish farming. To what extent can that take pressure off of fisheries to rebound? What % of the solution do you see that? How do you see that as part of the solution?
Alan, do you want to?
Yeah, well, this is a great question, and I think the reality is that aquaculture is going to take up a greater proportion of our development dollars when it comes down to financing this space, precisely because of the food security issue and the protein consumption requirements in our business line, at least, to address poverty reduction and food security. So, I mean, already we see in the course of our in our financing, at least our public financing, that governments are coming to us realizing that their, let's say, offshore fisheries are in distress, and yet their food security requirements are prevalent, populations are increasing. They're coming to us requesting for assistance in aquaculture investment. So I see that actually, I think the statistics earlier that was mentioned is that I think 2 out of 3 fish that are consumed are going to come from aquaculture in some, near X number of years or something like that. And again, the reality is that that's probably not far off from the truth. So I see that a majority of our investments ultimately, when we get the governance right in a fishery, is going to be turning towards sustainable aquaculture, which of course includes not only just financing, but a lot of work that needs to be done on technology and technology improvements, dealing with environmental externalities like effluent and effluent treatment, and so on and so forth. So, great question.
Yes. Other questions? Ed?
The 200 to 300 million, I guess I'll direct this to Larry. The 200 million to 300 million you mentioned is necessary for investment. That's over what period of time? These are all short answer questions.
So let's say 10, billions and
Well, you use the number 200 to 300 billion.
billion, yes.
Billion.
And, well, I should have said billion if I said million.
No, you said billion.
Yeah, so it is billion. I think the numbers, we're talking billions
B
here.
as in Bravo.
Yes, exactly. We're talking billions, and I will tell you, look, these are real estimates on my part, but I would say we're talking 10 to 20 years.
Okay, and your suggestion, as I understood it, was that a very significant part of that needs to go into what buckets 1 and 2, which you would characterize as good governance.
So I'll give you. You want the numbers?
No,
Okay.
I don't. Yeah, I'll take the numbers.
I'll give you the number. I've said it enough times, so I don't really. I will caveat these are really swags. So, and maybe I should just talk about it the way we talked about it before
Yes,
this.
go ahead.
$100 billion revenues, $100 billion in wild-caught fisheries. Based on what evidence I've seen, 20% of annual revenues is the requirement for the upfront investment in getting good reforms in place. So that's a $20 billion number. The ongoing annual cost of managing these fisheries is, if you look across fisheries, that annual management cost is probably anywhere from 2% to 12% of annual fishery revenue. So I put it at 8% and call that number $8 billion a year. The private investment number, I was trying to remember how I did this. I think I looked at macro numbers of total capital invested in fisheries and assumed a depreciation schedule and how much would need to be invested every year in private capital to improve the fishery. And that number is probably in the 2 to 3 billion a year.
Okay.
So
If you look at the last.
big numbers in the first two, much smaller in the private capital.
If you look at where investments have been made over the last 10 years in buckets 1 and 2, where has that money, how significant has that money been? To whom has it actually gone, and what has the result been? That's maybe a question.
Helen, do you want to take it?
Yeah, I mean, I think the amount of, again, private capital can be defined in lots of different ways when it comes down to this space. But ultimately, the money has been mostly spent in the artisanal fishery space. One.
What?
in the nearshore fisheries, not in the offshore fisheries, although that's starting to shift. Two, what kind of impact has it been having? Well, on the governance side, as I mentioned, one of the, what became more well-known and well-attuned was around co-management. This is something that we were starting to invest in from the World Bank in terms of the empowerment angle. And the reality is that by having those coastal fishers being not only part of the solution, but by having them part of the governance structure itself, that would allow for better management of the nearshore fisheries. And those results actually, again, from a catch per unit effort indicator, shows promise. What's having it?
Isn't there a disconnect between what you just said and what Alex said, is that he's looked all around the world, and in fact is the opportunities for investment of private capital are really dismal. I mean, there's Chile, maybe the Philippines, not Brazil so much, and U.S. and North Atlantic.
Well, what Alex
All
is...
that money that's been invested in trying to achieve good governance has produced relatively few opportunities for private capital in any place in the world.
Well,
And
2
that's
points.
what I thought Alex
So
said.
2 points to that. One is that we're just starting, actually, in reality, when it comes down to development dollars in this space. As I told you, the World Bank is the largest public financier in this space, and we're just a drop in the bucket. And secondly, I think what's going to happen is World Bank and other public financing helps pave the way, or at least puts the base capital in place for these particular reforms. You're going to unlock this private capital. At least that's our hope, because our financing in and of itself is not going to run the table.
Chile wasn't one of those countries 2 years ago, and then they passed comprehensive legislation that set science-based quota limits, and Peru is likely to follow very shortly thereafter, and Brazil, and so I think things are changing. I'm saying there's not really a role for private capital to play in pushing those reforms necessarily, but we can be there to say, if you make those reforms, we can invest hundreds of millions of dollars in your fisheries.
Good, thanks.
Other questions? We have a few minutes. Amanda?
Yeah, so you said it would take about 10 to 20 years to spend that $200 billion. How long do you imagine it would take to see returns from that, or see that $200 billion come back to our economy?
Who wants to take that? Larry? Throw it out to you since you put the numbers out there.
Tell me when you want. Keep getting over my skis here.
Will I still be alive?
Yeah. So I think depending on what fisheries you look at, the projected recovery rates vary. I think the sort of the macro number that goes with those costs that I think comes out of the Sunken Billions report that the World Bank did and complementary academic research says that we ought to be able to take fisheries from an annual economic deficit of greater than $10 billion a year to an annual economic benefit of, the estimates range from 50 to 70 billion positive. So you're talking about 60, 70, 80 billion dollars in annual benefit generated from a net present value 200 billion of costs, or generating 60 billion of economic value every year with, call it, $10 billion of annual costs against that required. So the returns look good. You asked the critical question, what's the time frames to think about? And maybe some of my colleagues have a better recollection, but I think we're talking about those benefits really being realized in the 5 to 10 year horizon. So there's kind of a 5-year gap of negative to positive turnaround before you get to that really compelling cost-benefit proposition in probably years 5 to 10.
And you're saying 5 years once all of those regulations and policies are in place,
Yes.
which can take.
Yes. Yep.
At least, yeah. I think we have time for one more question. If we have any, yes, sir.
My name is Fraser McGilvery. I'm based in Honolulu. I'm just wondering how much of your assessments on 200 to 300 billion is private money, or how much of that is actually coming from the Walmarts, the Nippon Suisands, the Unilevers, etc. of the world, who are really driving that kind of like consumer-driven I think it was bucket 3 you were talking about supply chain shift, and how much of that 200 to 300 is coming through that piece?
So as I said, I think it's small relative to the 200 to 200 billion. And I know I'm going to get hung on these numbers at some point, so I'm braced for it. But again, to just continue with my estimates here, I think it's less than 5 billion a year, and it's probably half that. And I think a lot of that money is already flowing from the companies you're talking about. And I think again, to be a little free market on you here, I think if we had the right governance in place, that a lot of that small private capital piece would take care of itself.
Great. Well, thanks, Larry. Let me just thank all of you again for taking the time to come here, and thank you for spending it.